What we notice at the moment in small caps is there's a lack of coverage from the broker community. Goldman Sachs put a really good piece out on this a few months ago, and what it shows is in about 2013 there was about 1,400 estimates in the market, so 1,400 forecasts for small cap stocks. That's down to 1,000 now. So in the space of 4 years, we've had 400 less estimates in the market, and that's despite 100 new companies coming to market. So it's just much less covered than it used to be, and there's reasons for that. It's getting harder to pay brokers, there's more compliance. But what that does for investors like us is create opportunities for those that want to go and do the research, do the hard work. The other thing when we look at the universe is it's very big. So close to 800 companies in small cap space, only 300 are covered. So there's a huge opportunity set to find unloved gems. Yeah, so not only have we seen the number of stocks being covered drop, also the quality's dropped. There's been quite a big brain drain from the broker community that have often left the industry or they've come to work for fund managers like us. So we've seen a big drop in quality, and when you look at that statistically, that means earnings estimates are more stale. So when you look at data again from Goldman Sachs, as we get towards the reporting season where we are now, some models haven't been updated for 6 months. And clearly there's a lot that goes on in that 6 months which you can incorporate in your forecast. So there's some inefficiency there. Also just that less experience on the broking community. Often we see mistakes that are pretty obvious. This can occur in some pretty big companies actually. So Seven Group is an example of $3 billion company. They went from 50% to 100% of Coates Hire, and it took 3 months for the analysts to update their numbers for that, when really that's a 10-minute change in a spreadsheet, put in the debt, more shares on issue. We had about 15% lift in our earnings estimate, and once those numbers go through the market 3 months later, for compliance and a whole bunch of other reasons, then the quant funds start buying. So you have a 3-month window where you're buying with public information that's not yet incorporated into broker forecasts. So there's some glaring inefficiencies. Another one would be Speedcast, where the result last year there was an error by one of the brokers. Stock got sold down 15%. We met the company the day before, post their release. We backed our conviction, and by the end of the day that stock had rebounded, and then 6 months later it had doubled as that error was reversed. Clearly one of the implications of the drop in quality and number of research is we can no longer rely on brokers. And we never have at Perennial Value. We've got a large team, so we've got 6 analysts working on the small cap business. That's a very large team relative to peers, but we need that team because every company we own, we have at least 10 years of history in our models, at least 3 years forward, and we do a lot of company visits. So over 1,000 company visits last year to try and uncover those new investment ideas, but also cross-check some of our views, so we could be meeting with competitors, suppliers. So it's a big research effort from what is a good-sized team. Well, a couple of things to note there. As we go into reporting season, small cap valuations are pretty elevated, so we're quite cautious at the index level. But again, the universe is so big, close to 800 companies, that we've been able to find value, but it's not in the mainstream areas. So we still see some good value in mining services. That sector's coming off a recovery year. It's a 5-year downturn. We're only 1 and 2 years into the recovery, so I think there's a bit more left in that sector. We're quite cautious on retail. There's been pockets of good news, pockets of bad news. The banks are really tightening up on credit, so we think whether we see it in August or it's the next reporting season, we think there's going to be some weakness in retail. Housing we're very cautious on, we've got no positioning in that space. And companies that are exporting is of interest to us. The currency's been a bit weaker, particularly if they've got some technology which is relevant in the worldwide markets. We're seeing good market share gains from Australian exporters.